Sometimes the hardest part of trading isn't spotting a setup. It's knowing what kind of market you're actually in. Is it trending? Is it consolidating? Are we in a momentum burst or a slowdown phase? Most traders lose money not because their strategy is bad, but because they use the wrong tools in the wrong type of market. In this video, I'll show you a brand new indicator on TradingView that solves exactly that problem. It doesn't just rely on one signal or oscillator. It combines data from multiple indicators, trend, momentum, volatility, and even market structure, and gives you one clear picture of what's really happening in the market. It's called the Market Sentiment Technicals by LuxAlgo. And the best part is it's completely free. All right, let's open TradingView. Click on Indicators and search Market Sentiment Technicals. Choose the one by LuxAlgo. Once it's on your chart, you'll notice it immediately overlays several components right on top of your price chart. At first glance, it might look complex, but once you understand what each part does, it's actually one of the most powerful multi-indicator tools you can have. So here's how it works. This tool uses a combination of trend indicators, momentum oscillators, volatility measures, and even price structure concepts like break of structure and change of character. It takes all of that data and processes it into a clean, visual representation of overall market sentiment, whether the market is bullish, bearish, or just moving sideways. Let's start from the left side of the display. This section focuses on momentum. Here, you'll see multiple well-known oscillators lined up together: RSI, stochastic, stochastic RSI, CCI, commodity channel index, and bull-bear power. Each one has a small bar that shows its current level, helping you instantly see if the market is overbought, oversold, or somewhere in between. For example, when RSI and stochastic are both near the top and the bars turn bright, it signals strong momentum to the upside, but it can also warn you that the market might be reaching exhaustion soon. When multiple momentum bars are near the lower side, it means short-term sellers are dominant or the price is oversold. On the right-hand side, you'll see the trend and volatility indicators. These include the moving average, VWAP, Bollinger Bands, supertrend, and linear regression. They work together to show you the strength and direction of the overall trend. When most of these trend indicators align to the upside, you'll see that reflected visually in the sentiment meter. When they start to flatten or point in opposite directions, it suggests consolidation or possible exhaustion. The tool even factors in volatility, so it can tell you if the market is calm and ranging, or if it's expanding and likely to break out soon. Now, one of the most impressive parts of this indicator is the market structure analysis. It automatically detects key price action events like break of structure, change of character, and market structure shifts. These are essential for understanding when a trend might be starting, reversing, or continuing. It simplifies what price action traders spend hours manually drawing on charts, giving you a real-time read of structure strength, whether it's strongly bullish or strongly bearish.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
All of this individual data is then combined into a single metric called the overall market sentiment. You can see it displayed in multiple forms. The first is a horizontal bar that changes color based on sentiment. Blue or green shades show a bullish market environment. Red shades show bearish, and neutral tones indicate consolidation. You'll also see a circular market sentiment meter on your chart. It's like a dashboard gauge showing you the current market bias at a glance. And right below, you'll find the market sentiment oscillator, which works almost like an RSI for the entire market. It measures the general emotional state of the market by combining momentum, volatility, and structure data. Here's how to read it. The oscillator has a center line. When it moves above the center and the area turns blue, it shows that bullish momentum is dominating. When it drops below the center and turns red, bearish pressure is increasing. Crosses over the center line can signal potential trend shifts. But remember, like any oscillator, those crossovers can also produce false signals. So always confirm with price structure or other technical elements before entering a trade. You'll also notice overbought and oversold levels marked on the oscillator. When the oscillator reaches the top band, the market may be overheating, suggesting it's time to look for potential exhaustion or divergence setups. When it dips near the bottom band, the market could be oversold, indicating possible bounce zones. And speaking of divergences, this indicator has that feature built in too. You can enable it in the settings. Just double-click on the indicator, go to Inputs, and under the Market Sentiment Oscillator section, you'll find an option called Show Divergences. Choose Regular, Hidden, or All, depending on what you want to spot. Once activated, the indicator automatically marks divergence lines between price and sentiment. For example, if the market makes a lower low, but the oscillator makes a higher low, that's a bullish divergence. It means selling momentum is weakening and a reversal or push upward could be near. On the other hand, if the market makes a higher high but the oscillator makes a lower high, that's a bearish divergence, showing that buying momentum is fading and a potential drop could follow. But keep this in mind. Divergences alone are not entry signals. They're early warnings. You need extra confirmation like structure breaks, candle patterns, or volume shifts before taking a position. What makes this tool so powerful is that it doesn't force you to guess. It merges all the classic indicators, RSI, stochastic, moving averages, volatility tools, and even market structure, into one clear reading. It's like having an entire analysis team inside one indicator. You instantly see whether the market is trending, ranging, or preparing for a reversal, all without flipping between different tools. If you want to optimize it for your trading style, here's a quick tip. For scalpers or short-term traders, try using shorter look-back periods so the oscillator responds faster. For swing or position traders, increase the smoothing or keep the defaults for a steadier signal that filters intraday noise. Also, combining this indicator with volume or liquidity tools gives you even more precision when timing entries and exits. Watch how the sentiment shifts before big breakouts or reversals. It's surprisingly accurate once you get used to reading it. That's all for today's breakdown. If you found value in this explanation, make sure to like the video and subscribe for more. I'll see you in the next one.